Hey guys, what's up? Easy Life, how are you doing here tonight? Appreciate you being here. All right, let's get this show started. Jackson, what are you doing? Hang on, let me shut the door. All right, Jackson, you behave while I'm doing this show. All right, you behave. All right, tonight's Tesla Tuesday, so we're going to have a good time tonight. We're going to look at the MaxFactor. We're going to look at the Tesla surrogates according to the MaxFactor. The MaxFactor is my own proprietary metric that is a better way at looking at these high yield funds than just total return. Total return doesn't give you the full story. The MaxFactor does. I follow 100 and it's now up to like 160 funds on a day by day, tick by tick basis. We're going to look at, like I say, it's Tesla Tuesday. So we're going to look at the Tesla surrogates, TLSY, TLSP, TL, whatever. You guys know all the TSLs. And then after that, we're going to have a redo of last night. It was Bitcoin Monday. And anyway, I had a mess up. But anyway, so we got that figured out. So we'll do that. Then after that, if there's anything you guys want to look at, any specific funds. Hey, Jeff, how you doing? Appreciate you being here. But anyway, if there's anything specific you want to look at, like we can talk about today, or and we can see which ones did the best at protecting capital. We can look at the MaxFactor, whatever else you guys want to look at. All right, guys. Let me share the screen. I'm gonna try not to share the whole screen. I'm gonna do something different. Just share the window. Wow, look at this. And then I'm going to keep you guys open back here, but you guys should be able to see me and the daily factor. Okay. So let me make sure that's right though. All right. Well, anyway, yeah, it looks like you guys can see everything. Okay. So Tesla Tuesday. So let's go yield chasing. Our first contestant is TSYY from our friends over at Granite Shares. Will does a great job over there. 90 days ago, this thing's price was at $8.56. The other day, it's at $7.52. So that's a change of negative 12. It's down 12%. That's just this quarter. That's not including dividends. That's just the NAV performance. It's important to separate the NAV from the dividends. They interact with each other, but that's why I'm actually trying to study. And when you do total return, it throws it all in. It throws it all in together. All right. So, but TSYY has 195% yield. So that's the yield chaser special right there. Now TSLY doesn't exactly have a low yield on a trailing 12-month basis. It's a 101% yield. That's really good. Now, 90 days ago, it's at $7.87. Now it's at $8.35. That's really good. It's actually positive NAV performance. So it's up 6.1% NAV only. That's impressive. Very impressive. And it pays 101% yield. I mean, that's really good, right? All right. So next we have TSLW from Round Hill. It's paying a 47% yield on a trailing 12-month basis. It's gone from 32 and change to nearly 37. So that's up pretty good. It's up 14%. Not bad at all. Good job, Round Hill. Then we have TS2 from Rex. This thing is paying about a 43% yield. NAV's gone from almost 23 to 28.5. So that's a pretty good NAV return. That's about 25%. NAV only, no dividend. So that's a good one. Then we have TSLP. Now it's only paying a 34% yield, but as you guys know, if you watch this show for longer than 5 minutes, a high yield's good, but it's also bad. It's both. It's neither. It's neither good or bad. It just is what it is. But it is also a yield it's a tax on the future upside of the NAV. And so sure enough, true to form, TSLP, which pays the lowest yield of the bunch, has the best NAV of the bunch. So let's just look, if we just wanted to go by NAV return, what would we choose? We choose TSLP at 28%, TS2, 24%, TSLW, 14, TSLY 6, and TSYY is negative, but it's paying that huge yield. All right, let's just choose the most stable one. So the most stable of the Tesla funds is also TSLP. Well, I think we know what the winner is going to be. I mean, it wins on NAV return, it wins on stability. And now it doesn't win on yield, though, but the MaxFactor can parse all this out. Anyway, the most stable one's TSLP, and surprisingly, the second most stable one is TSYY. But at a 31, that means it's only 31% stable. It's not that much less stable than TSLP. If you get to 1, that's the stability of the overall market. It's about as dangerous as the overall market, or as wild, or however you want to think about it. Anyway, but then TS2, TSLY, and then TSLW being the most dangerous or volatile, let's just call it. And that, like this also, this isn't bad or good. Stability, it can be both. I mean, you know, it can help you on the way up. If you have real volatile stocks, great in a bull market, because it's volatile if it follows the market in the bullish direction, of course. Well, but it's a double-edged sword. Now, of course, TSLW uses a little bit of leverage. So, and for that fact, TS2 does also, but they just do it on half the portfolio. They do a little bit different version of it. But TSLW leverages the whole portfolio 20% a week, so that contributes to a little bit of extra volatility. All right, who do you guys think the winner is? I think it's going to be TSLP, because, I mean, you got the NAV return, you have the stability. I mean, and it's 34% yield. That's not bad. I mean, I'd rather have 195% yield, but I'd rather not lose 12% on my NAV, right? I mean, so it just depends. I mean, all right, so let's see who it is. Sure enough, TSLP from Curve. So this thing's the full package. It's 34% yield, 28% NAV return only for the quarter. At that rate, it's going to make 100% NAV return for the year. I don't think the rate will continue, but they're in other words, these guys are on path to have a total return of about 134%. I mean, that's incredible. That is really incredible. Number 2 is TS2. These guys do a good job. They do a kind of a mix between a couple of other fund strategies. With half their portfolio, they do a synthetic covered call, which would be the yield max strategy, but then they also lever it a little bit on that half of the portfolio. So that would be borrowing from the round hill strategy. But then instead of writing on the whole portfolio, they just write on half the portfolio. So it's kind of a modified deal there. Good job, TS2 from Rex. And we have TSLY, kind of mid-pack. I mean, it's paying 101% yield and it has 6% NAV return. I might argue that this one's the best. I mean, it's the one I'd probably choose. But I'm kind of a yield chaser. But you get 100% yield and still have positive NAV return. What's not to like? Now, granted, it's not quite as stable. It's not going to be as smooth of a ride. And overall, it doesn't have as good of risk-adjusted reward as these other two, according to the MaxFactor anyway. Then we have TSLW coming in fourth, and this is a good one too, paying a 50% yield, and the NAV's up 14%. The only knock on is it's a little bit, it's going to be a rough, it's going to be a rough ride. I guess that's the only knock. And compared to Tsla, it looks like, pays about half as much yield, but it gets a little bit more than twice as much NAV upside. But you have to factor in the volatility. It's about 20% more volatile. So got to consider everything, all things considered, right? And anyway, TSYY from Granite Shares. Not that this couldn't work in a portfolio. It's up 195%, but this one's not going to be a NAV champion, or at least it hasn't been so far. All right, so that is Tesla Tuesday. So I'm going to go back over to the other screen and make sure that, could you guys see that? Was that all good? Yeah, you guys could see that. Okay, very good, very good. Well, we have Froggy T. White here, and we have Skeptic. And I appreciate you guys being here. We'll answer these questions in a little bit. Yeah, TSLP. Heck yeah, TSLP is hard to beat. All right, so last night's show was, I need a do-over on it because I had an error in the charts, and I still don't think it's right. SSK, which is the Solano staking, was winning according to the MaxFactor, but I threw it out. I don't think it's fair to compare staking to cover. I mean, there's some kind of error in the calculation. The numbers aren't right, or something. Jeff, I would say that actually the one that's closest would be TSLW. Well, I mean, TSYY. I mean, okay, TSYY has twice the yield of Tsla. TSLW has half the yield. But I mean, I just, how much yield does a person need? I think TSLY is the kind of the good middle of the road solution here if you're really chasing yield. But remember, this is just based on this past quarter, and options are heavily path dependent. It depends. There's all kinds of different things. It also depends on how far out of the money or in the money or what the managers are doing. So, all we can do is measure it one quarter at a time. But I think this quarter, I'd say TSLY and TSLW are close in competition. I could see making a good case for wanting either one of those, but really, if you just, but TSLP is awfully impressive too. If you didn't mind the 34% yield, but if you needed a little bit more yield, I think I think TSLY is the ticket. But anyway, there's no, this is quantitative, not qualitative. There's no editor's choice here or whatever. All right. So, but the do-over for last night. So let's do this. We're going to do Bitcoin again, like I say, and we're going to throw out SSK because it shouldn't have won. It paid like a 6% yield, and the SNAV was kind of steady, and it was super unvolatile. I mean, I guess you could make a case for it, but if you want SSK, go for it. But let's look at the actual covered call funds based on Bitcoin surrogates. Okay, so let's go yield chasing. We have XBTY, 135% yield, but unfortunately, NAV's gone from 23 to 14. So the NAV on all these is a mess because of the underlying. It's based on Ethereum and Bitcoin. Next is YETH with 109% yield, 28% negative NAV. Remember, this negative NAV isn't the total return. It doesn't include the yield. And like I always say, we have to separate them, and we're studying the interaction between them, and the way one affects the other is what my metric is measuring. So then we have YBIT with yielding about 90%. Negative 24% on NAV return is not too bad, but all of these are down. I mean, there's not one of these that are up. The one that's doing the least worst on NAV is BTCI, but even that thing's gone from 62 to 52. It's only 16%, but at the same time, that thing only pays a 32% yield. Not that there's anything wrong with that, but anyway, so we have YBTC, then we have Maxi yielding 42. BCCC's maybe a good kind of middle of the road alternative, yielding 40, and its NAV is only down 18%. I mean, and then we have Baggy yielding 38. Then we have BTCI yielding 32, and we have BITY yielding 28. All right. So that's our yield chasing. Let's just go for NAV return. We kind of already talked about this. The best NAV returns BTCI and BCCC from Global X. I bet Global X uses monthly options. They may not. They may use weeklies, but they kind of they're kind of a more conservative. They have a more conservative brand. So that doesn't surprise me. I'm drawing a blank on whose brand BTCI is. I ought to know. BTCI is, who is BTCI? I ought to know. It's Amplified, not Amplified. Neos, of course. You want to talk about a brand known for stability, of course, BTCI. Okay. Well, all right, back to the show. And with BCCC, BTCI, very good. And then we have Biddy. Now, Biddy's only it's a 2% a month target fund. So it's targeting around a 24% yield. Been yielding 28 though on a trailing 12-month basis, but it's targeting 24. The reason it says 28 is because the NAV's in a state of decline. The NAV's down 20%. The MaxFactor understands that, and it doesn't give it credit for you can't pay a high yield just by having the NAV drop 99% and paying 1,000% yield. That's no bueno. The MaxFactor parses all that stuff out and equalizes for it. Anyway, Baggy's is a 3% target fund, so it should yield 36. It's yielding 38 right now at this time. And you can see that the NAV return is down 23 for baggy and for YBTC. And really we have Biddy, baggy, YBTC, and YBIT and YETH that are all down, that are similar amounts. Really, baggy, YBTC, YBIT are really down similar amounts. Those are pretty much tied. Biddy's doing pretty well on NAV return, only down 20. YETH not so great, down 28, but it's based on Ether. It's not all the high yield's fault. It's also the underline's fault. Then we have Maxi over here down 31%. And then we have XBTY. Now they're selling leveraged Bitcoin options. And so this would make sense that it's, that in a down market anyway. In a down market, it might be a totally different ballgame. All right, let's see if we just wanted stability. Let's just go get the most stable one. Well, this says it's Maxi, which I kind of have a hard time believing, but numbers don't lie, assuming I didn't make a mistake. Well, anyway, then we have YBIT is also fairly stable, but heck, Maxi's listed as almost being as stable as I'm not even believing that. There's no way. I bet that's a bad number, but it's not going to matter that much. Anyway, YBIT's about half as stable as the broader market. XBTY is about half as stable as the broader market. And then it gets worse from there. And baggy's the least stable of all of them. Then YETH is also very unstable. Like I say, stability is a two-way street. You don't want too much stability in a bullish market. It kind of works both ways, but in a bearish market, it can definitely hurt you when you're volatile on the downside. All right. So who do you guys think is the winner? Let's go see. Here we have it. Look at this. YBIT yielding 89%. Decent NAV, decent return, decent stability. Heck yeah. Then we have XBTY, believe it or not. I don't know if I'd buy that one. But anyway, then we have YETH, BITY, BCCC, Maxi, YBTC, Baggy, and BTCI. All of these, a lot of these are close. There's the Biddy, BCCC, Maxi, YBTC, Baggy, BTCI, all yield, mid double digits. And the ones at the top yield, are high yielding, but these ones that yield mid double digits, if I was just picking one by eyeball, I might pick one that met my qualifications. Especially, I might look at BCCC yielding 40%, NAV only down 18%. That's not a bad trade-off. And that's definitely a little bit better than like something like Baggy that's only yielding 38, but its NAV's down even more. So it's yielding less, but its NAV is not doing better. And that would be the usual relationship, because as you know, a high yield is a tax on the NAV's upside, future upside. All right. Well, so there we have it. YBIT's our champion. XBTY is number 2, although I don't know about that. It's to each his own. To each his own, definitely. So what did you guys think about that? And I'd be happy to take requests, questions, whatever. We can look at whatever you guys want to. So many 52-week lows, yes. And Jeff is here. Yeah. I hope they don't either. Anyway, I think since it's fine now. It'll be fine. TSYY. That's your pick. Yeah, you're happy about that. All right. Okay. Anyone using M1 Finance? Here's a serious question. I've been thinking about making pie slices of these MaxFactor. Oh, I see what you're saying. Buying partials and trying to build a pie with the top. We can look. We'll go look at those. Let's go pick you out some. Dan's in the house as well. All right. Can I walk through the NV and PLT funds on Tuesday? No harm if you can't. Can you work through NV? So NVIDIA and Palantir. Yeah, we'll do that. Or maybe we'll just do that tomorrow night. But we can, how many NVIDIAs are there? Some of them I looked at doing some of them, there's only 3 and it's not, it was but the more there is, the merrier. But we can absolutely do that. Well, I'll do Nvidia and Palantir tomorrow night. I think that's fair. They have enough. We could throw them in the same bucket. Also, well, not really. We could maybe throw Nvidia funds in the same bucket as AMDY funds, basically, because chip funds maybe. But we'll do that tomorrow night. We could even look over there real quick and get a quick preview tonight or whatever. All right, Froggy, you were only down 2.5% today. That's about what I was down. That's the model portfolio was down, but it's because 18 or 15% of my portfolio was blocks, which I love. It's a good fund. It's super risky, but that's good in a bullish market because it's super volatile and risky. Good on the way up, bad on the way down. Anyway, but yeah, when you have 15% of that in your portfolio and it's down 7%, if it was 10%, that would make your portfolio go down 0.7%. But if it's 15%, that one alone brought my portfolio down 1%. And then I had some other ones that were down also. I also had BITK that got hit today. That's the Matthew Tuttle Fund. Tuttle, I know Matthew's now. I forget the name of the company. Tuttle Capital. That's their Tuttle Capital ETF. So anyway, yeah, we'll do Nvidia and Palantir tomorrow night. BITK might rock the MaxFactor in 2026. We'll see. Jay's saying short Mister, probably so. Misty is a dog. And we could also do it. There is enough funds to have a whole night for Misty. And we did Misty Monday last week. And but tomorrow we'll do Palantir, Nvidia, and Mister. How about that? That's tomorrow night's show. Yeah, winner's up. Winner's up because it's because Mister was getting killed. Mr. is getting killed. Steve's here. Fiat, check that one out. Yeah, Fiat's inverse Coinbase. I actually have a little bit of that, but I got a lot of that. Not a lot, but like 7% of the portfolio in Fiat and like 5% in something else. I did it last April when the market was crashing to where I still got a yield, but I did it in March and April, and it worked out pretty well. I didn't have winner. I had Fiat and I had dips. I was inverse Nvidia. I don't know why I bet against Nvidia, but it worked out. It's dangerous betting against Nvidia. I had Fiat and dips. What we need to have is an inverse night too. Maybe we can compare all the inverse funds one night. Maybe inverse will be Thursday, but tomorrow night we're going to get the other tech funds, Mr. Palantir, Nvidia. That'll be tomorrow nights. So Jeff's saying here that he did not sell XBTY today based on my solid advice. Okay, well, good. I appreciate. I hope that turns out. I hope that's right. I forget exactly what I said, but anyway, I'm sure it was very smart. I don't know. I'm just joking. Anyway, if it helps you, I'm just glad it helped you. But if you want to reconsider it, or we can go over it again. I'll look at it again, and we can reevaluate. And if the market, depending on what the market does, maybe we can reevaluate. I just forgot the exact details of your particulars. All right, so let's do this. Let's get out of here. Now we're going to go to the master list, so we can look at anything. So that's what I wanted to show you guys. Since the market's been misbehaving, it'll probably go right back up tomorrow. But since it's been misbehaving, let's pick out some stable funds. Let's go for stability. Let's look at the most stable funds in the universe. All right, so we have FIAX based on bonds, but it only pays 8%. But let's do this. Let's try to find a stable fund that pays 20 to 30%. Let's try to find 5 of them. So these are all right here, and by stable we mean something more stable than the market. So let's go down here to where the market stability starts, and then we'll go up from there. Okay, market stability starts right here. So here's our choices. Now we have plenty of choices that are somewhat stable. They're at least statistically stable. That just means they don't move around a bunch. It doesn't necessarily mean that they're doing well. It just means it's about the same risk as the SPY. All right. Well, Maggie. I don't know about Maggie. I like it, but I like it, but YMAG generally does better. The last couple of times I tested it. Maybe we can look at that in a second. Maggie against YMAG. Maybe we'll even see YMAG up the list here. Now, YMAG's probably more volatile. YMAG's down the list a little bit. Hang on, we'll check it out. Maggie, and there's Maggie. Let's go see where YMAG is. All right, there's YMAG. I was just going to look at the 005. Hang on a second here. 003. Okay, yeah. Well, Maggie's actually ranking ahead of YMAG in the MaxFactor. In any event, YMAG's risky. So back to the original thing. Let's try to find something. Let's try to find something that's at least 25% more stable than the broad market and has a decent yield. So here's our choices: Gold I, WDTE, JEPQ, TLTI based on bonds from NEO. So that could be a good one. Not a lot of yield. And so far this quarter, not a lot of NAV, but it's stable. Anyway, AMAX, I forget what that one is. Omaha. Now here's one right here. Pays 15%. It's based on Buffett style underlying. So probably lots of insurance companies and banks and, companies with earnings and good fundamentals, mostly, I would imagine. That's not a bad one. That wouldn't be a bad place if the market keeps going down to sit out the down market. Now, these other ones right here pay less than 10%, but we can look what they are. SCHD, RSPA, we talked about that on the afternoon show. GPIX, SPIN, that's an S&P high yield ETF. Kind of low yield. I mean, if it's not double digits, I don't even, get excited about it. It doesn't mean they can't have a place though in a portfolio. Now, here's one though, SPY, it's 37. It's more stable than the broader market, paying 11% yield. Its NAV is gone from 51 to 52, so its NAV's up slightly, but that's not bad. That's a good one right there. Then we have XV right here. XV is a good one from our friends over at Simplify. They aren't our friends. I've never had them on the show. I'd like to have Simplify on the show. Simplify has one that pays 13%. NAV's flat. And it's, these are on the less volatile side. Here's probably the pick right here is IVVW. XYLG that's not a real number. They had a one-time dividend that made their yield look higher than it really is. The typical yield, I think, on this is 6%. So, but in any event, all right. I think the winner of this is this IVVW. Let's go up and see if there's any more that have double digits. Yeah, we have SBAR that's double digits, 11%, and it's super safe. It's a 1.69 on stability, meaning it's a lot more stable than the SPY. Some of these get too stable though. So let's just go. I think I'm declaring the winner. Stability winner denied it. Well, it depends on what you want, but this IBVW, this thing's paying 16.8%. It's super stable. NAV's gone from NAV's good. But there's a lot of good ones on here that might meet your qualifications. TLTW is based on bonds. It has better stats than the one I just picked. My new pick is TLTW. Let's keep going, see if we can find a better one. Here's one that this one is seriously, I don't understand it that well, but STRC, it's preferred stock from, and it's based on MicroStrategies. But unlike MicroStrategies, its price doesn't suck lately. For the quarter, its NAV is up 2% and it's paying a 12% yield. I'm not endorsing it necessarily, but this passes the eye test. Safety, yield, this passes the eye test. And then we have CEFS. I think Marcus likes that one, or is at least a fan of closed-end funds. I think lots of people like that one. I've heard good stuff about that one. Only yielding 8%, but it's giving you safety and stability. XYLD, not really for me, but it's passing the eye test. The Riser, HYGW, those are bonds. The bonds really don't do much for me unless I wanted bond exposure. Then I might get one of those. I'm a stock guy. The best looking one on this list. This TLTW looks good, but it's bonds also. So not that there's anything wrong with that. If you want exposure to bonds and you think interest rates are going down, especially, that that's, you might want to make a bet on bonds. But I'm just looking at kind of the full picture here. I say IVVW. I just like ones that are indexes, or IVVW, XV, or SPY. They're all right together, the full thing. Plenty of safety, decent NAV. You know, the worst one is flat. The other ones are up a little bit. Those are my safety picks. But then also, we were talking about this today. This is kind of a different situation. RSPA only yields 9%, but what it is an equal. It's based on an index called the RSP. The RSP is called the equal weight S&P 500. So they have 500 companies in it, and they're all the same weight, which is 0.2% or 20 bips. There's 20 bips, 20 basis points, and 500 funds. But what that does, because the normal S&P is cap weighted, so yeah, so the bigger the company grows, the bigger the weighting is. I think Nvidia is 8 or 9% or 7% right now, so that's fine. I mean, that's fine if you want concentration. But in market pullbacks and stuff, generally, you can find safer ones. Well, you're safer not to be as you're safer if you aren't as concentrated. Concentration is good on the way up, bad on the way down. It's just like any of these other factors. None of these factors in isolation are bad. It's not really bad to have a fund that's super unstable, and it's not really bad to have one that's super stable. But it's just the combination. It depends on what you're going for. Depends on the market condition that's running across also. It is really bad to have, well, I was trying to think if there's any absolutes. I mean, on stability, there really isn't. And I mean, it's just a two-way street. It's a two-way street. So it just depends on the other combinations of factors you have in there. All right. So what else you guys want to talk about? We can talk about something else, or yeah, hit the like button. I appreciate that. So Jeff is saying he loves Tesla Tuesdays. Thank you and good luck tomorrow. Okay. Well, we'll see you tomorrow, Jeff. So Easy Life only has Maggie because of the different payment day. Yeah. Well, it looked like they were right there together. In fact, I thought I tested them before, and YMAG did considerably better. I swear I did, but just now when we looked at the MaxFactor, it did not do considerably better. Let's go look at this. Let's just go pull it up the old-fashioned way. I got tired. This is one reason I've been the MaxFactor is basically all these numbers in a spreadsheet, but I can't change the dates. The dates are either a year or 9 or 3 months. A year's the long-term MaxFactor, 3 months is the short-term. But basically, Jackson, quiet, Jackson, hang on. All right. So, well, just in the head-to-head, I mean, that's not a great look for Maggie, but let's look behind the numbers. Can you guys see that? I'm only sharing a window. I don't think you could see that window because anyway, you guys probably can't see that window. Yeah, you can't see the pop-up. Okay. Well, anyway, I'll just tell you the results. On this one, and this is since April 23rd. I guess that's when one of them came public. Jackson, get in here. Get back here. All right. It's YMAG is 45% total return, and Maggie's 29%. But total return could be deceiving. Maggie has better NAV return and lower yield. It just kind of it's dealer's choice on that. Anyway, what do you call seat belts? Call them seat belts. Oh yeah, Chad. Good. I remember. I told Froggy. I said, "Hey, Froggy, your name's Chad, isn't it?" He goes, "No, it's not Chad." And I go, "Damn it!" I said, "Oh no, I told you, Froggy." I said, "No, it's Easy Lives." I knew it after I said it. But anyway, I'll remember it. I'll remember it next time. I used to know Froggy's name and I forgot it, but that's fine. I'll remember it. I'll remember it. We got Jeff as Taz, and I got it. My name's Mike, in case you guys want to call me by my real name. But on YouTube, I mean, it's, my YouTube personality is Max. All right, guys. Well, what else do you want to look at? I mean, here's the plans. Well, let me tell you this. Let's talk about something else for a second. Man, Billy Strings is awesome. And I'm not really too into bluegrass and stuff. But I like him, and and he's a good acoustic player and whatever. But I was on YouTube, and he's on tour lately, and he's playing rock covers. And he was on a Halloween. Go to YouTube and check it out. He was on doing a Halloween gig. The whole band was dressed in costumes, and they were playing. I mean, they were jamming, playing covers. And I've never heard him play electric before. And I liked it. I mean, I like him. I always knew he was good. It didn't surprise me. But this show looks like a fun show to go to. Go watch YouTube, and I think I would have loved to have been there Halloween night. I think he's somewhere on the East Coast touring right now. But there's all kinds of videos about it, or videos of it on the internet. Billy Strings, Baltimore. Yeah, I'm watching. Yeah, how he was in Baltimore on Halloween night, and it looks like one of the funnest concerts. I mean, my gosh. And he plays a lot of great songs. Anyway, yeah, go check that out. I'm having a good time watching that. That's what I'm going to do after I get out of here. Oh, seatbelts are for the safety stocks. I got you, Chad. I got you. All right. Well, I don't really see any other questions. JPMO, I'm sorry. Oh, Fiat was the only winner today in JPMO. Yeah. How the heck was JPMO? I don't even know. I wonder if JPMO is even on the MaxFactor. It should be, but I don't recall ever seeing it. Some of them are just kind of consistently mid-pack and never, because I usually look at the worst and the best. Let's go look at the worst. We'll finish up by looking at the worst of the MaxFactor. I don't want to, I'm not trying to, say anything bad about these. Some of the ones that are the worst, like 3 months ago, two of them that I'm thinking of one was number one. Well, no, three of them that are the worst. I'll show you in a second. One was number one on the MaxFactor for a while, and one was consistently top 10, and one got into the top 10 a couple of times, and now they're right at the bottom of the thing. So anyway, let's take a look at this. Here we go. Okay. So let's get back over here, and let's sort by MaxFactor, and let's go worst to best. Gosh, I'm sorry, Misty Mafia. I mean, this one right here, according to MaxFactor, is the hottest mess, MSTY. I mean, but it kind of deserves it. It has a 236% yield. Okay, great, but its NAV's down 46%, and it's one of the more volatile funds in here. AIYY has just had that one, I don't know about that one. What is the deal with that one? That one can never seem to get out of its own way. Any of the AI-based ones. Anyway, then ICOI. Now, this was the one I was talking about. It wasn't this one, but it was a Coinbase one that was number one for a while. Actually, it may have been this one. I think it was this one that was actually number one. And I'm talking just like 3 months ago. And, it's amazing how far it's fallen. Anyway, then I missed. That one's based on MicroStrategies. All of these ones that are at the bottom are super volatile. There's no safe ones down here. Well, the safest one down here is ULTY. The only reason it's statistically safe is because it can't drop that far. That it can't drop as fast. It can still drop, but the puts slow the dropping. So, and also to be fair, USOY not having a great performance for sure, just like Alti is. But it's a relative basis. It's safer. But these other ones are just dogs. Not, they're super volatile. They're super risky. It's like, I was going to say something about them. All right. So, but XBTY, that one was never in the top, but Alti worked its way into the top 10 once or twice, back there in June or July. But Coinbase based ones, I don't know if this one particular, this one, This one was number one. ICOI was just on fire and was number one in the MaxFactor for a while. And MicroStrategies, MSTY, was consistently in the top 10 for a while, not 3 or 4 months ago. So things change, trends change. And now all the MicroStrategy ones are down in the dump. Somebody mentioned fiat, and it's not fiat's fault that it's this low. I mean, because it's you think it'll probably keep going higher if MicroStrategies keeps dropping, but also this goes back 3 months, and MicroStrategies hasn't been dropping for 3 months. For a while, for 2 of those months, MicroStrategies was doing better. Well, I don't know about that, but anyway, Murney's just kind of a perennial basement dweller. But Coney was also number one. Coney was literally number one for several weeks, and I think ICOI was also number one. These were as good as it got for a while. So, and then we have TSYY, SMCY. I think that one's going to be down big tomorrow because I think SMCI, I saw that they were down after hours. I don't know if it's an earnings report or whatever. These aren't necessarily bad. They're just out of favor. And I would say out of this group of funds, the best one of them is ULTY. It's statistically, it's the safest one. Out of this bunch, and of course I like it. I like what they're doing, but yeah, they've had a rough 3 months. I wanted to make the MaxFactor based on sensitive to the trend of the market. If we could go back 2 years, but it wouldn't really show you who's hot now. So that if we take a shorter look back period, it can kind of help you get into stocks as they're kicking into momentum or whatever. But I think ULTY and MSTW, there's nothing wrong with MSTW or MSTY. Those are, or ICOI or Coney for that matter. Their stocks are just out, their parents are just out of favor right now. But yeah, that's why I like this, all this relative safety that ULTY gives you. I really like the way ULTY protects capital on the downside. You guys saw, Blocks and LFGY have similar funds to ULTY, but they dropped twice as much today or more just because of the structure of the way they do stuff. All right. Well, so tomorrow night, unless there's any other questions, I'll let you guys go. Trailing 12-month. That's the trailing 12-month yield. So that yield may look high. You may say, well, that's not earning that high. Well, on a trailing 12-month basis, it is. But the MaxFactor understands that the reason is because the denominator is numerator, denominator, I get mixed up. But anyway, because if you have something in free fall, it makes the yield look artificially high. But I figure that out. So, but still, we have to have something to display. So like that Alti is not really yielding 135%, right? All right, Dan, you have a good one. Thanks for being here. We're getting ready to go anyway. But anyway, yeah. All right, well, let's just get out of here. Oh, let me see your question, Froggy. What now? Did I see your question about stable weekly payers? Well, I don't differentiate weekly payers on here, but let me look really quick. Then you guys can be excused. Let's look at the most stable ones, but I think you can be too stable, and we're finding kind of the reasonable stable ones. So that's 25% more stable than the market. Okay, right there. So are any of these weekly? I don't see any weeklies. Do you? There's no weeklies, are there? The stable ones just aren't weeklies. Part of the lack of stability is actually caused by weekly option selling. Monthly option selling is more stable, and I bet all of these do monthly options. I know XYLG does. So yeah, you may not be able to find. Let's lower our standards a little bit, kind of like you do at closing time, and finding someone to go home with. You got to lower your standards between 1 and 2, and then after closing time, you pretty much take whatever you can get, right? I mean, so let's lower our standards here. Let's find you a weekly pay one. Triple QI, CLM, those are monthly, right? IDEVO, SPY T. Now, is that weekly maybe? SFAL, no. CanQ, XPay. XPay's weekly. There you have it. XPay is a little bit more stable than the broader market. And, NAV's up 3%. It's paying a 19.4% trailing 12-month. There you have it. That's the pick. I think that's weekly. I'm pretty sure that's weekly. Big Y is a really good one that I like, but that's monthly. So yeah, most of the stability ones are monthly, but that was a good question. Froggy, or I'm going to, pretty soon I'm going to have the MaxFactor be able to be sorted by weekly and monthly, and also be sorted by company and some other stuff. I'm just trying to get it all, make sure it's working right and stuff. Make sure. I remember how frustrated I used to get whenever the spreadsheet used to always be broken. Well, I got a new data source, and I just want to make sure I have all the kinks worked out, and I think I do. So I'll start adding back in. We could even like sort by days of the week. We could sort by company. We could pull up all the yield max ones. We could pull up all the round hills, and we could also sort by weekly or monthly pay, or some of them even pay quarterly. All right, guys. Well, barring any further questions, now that Dan's gone, the party's over. It's time to go get some rest, guys. I'm going to go watch the rest of this Billy Strings. I'm telling you, this guy, it's a really good show. I wish I would have been there. Anyway, I can't see some of the other questions. Will Big E ever go weekly? I don't know. I can barely see it through there. When threes turn to sevens, okay. Sounds like you've been there before, Chad. All right, guys. You have a great evening. I'll talk to you later. I'll try to. I'm trying to end the stream. It won't end. Maybe the trolls have got a hold of it again or something. No, it's going to end this time. All right, guys. Thank you very much. Have a great day.